And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Katie Greifeld, taking you through to that closing bell with the global simulcast. Massar and Tim Stenovec join us now, hopefully to bring the energy. Welcome to our audiences across all of our Bloomberg platforms, television, radio, our partnership with YouTube on another sell-off right now in the broader U.S. equity markets.
Yeah, it feels like, here we are, those major equity averages, as you know, remain kind of hovering around the bottom. It does feel like we get a little pop.
Welcome back, Tim Stenovec, by the way.
Thank you.
Welcome back, Tim.
Yeah, thanks. I was just gone a day, but it felt like so much longer.
For us, too.
Yeah. Sorry, Carol, you were speaking.
No, that's okay. I'm used to being interrupted, but go ahead.
Oh, my turn?
Yeah, go ahead.
Oh, okay. The S&P 500 today down 1.5%. It's actually down just about 4.3% from those all-time highs earlier this year. Still up almost 15% from those lows back at the end of March, Katie. But just, zooming out, this is actually a pretty big sell-off in recent days.
Yeah, it's interesting. We were just talking about it, how you think about today. We did see some of the major averages manage to turn positive, and then it was just a slow slide lower here. And it feels like it started last week when we got that disappointing forecast from Broadcom. It's going to be interesting to see if maybe Oracle can inject some enthusiasm back into this AI trade. But what a week it has been.
Yeah, but the expectations are high once again, and you feel like, okay, if we sort of get that cloud revenue forecast more and it comes in, even if it's above estimates, if it's not sort of above estimates, then what does that do to the market? We're going to find out in just a few minutes. Those results are imminent as we get the closing bells here in New York. A Dow Jones Industrial Average selling off by almost 1,000 points on the day, down about 1.9%. The S&P down 1.6%. The NASDAQ indices down each about 2% as we wait for these numbers to settle. And the Russell 2000, the relative outperformer, it's only down 1.1%.
All right, let's go at the S&P 500, folks. We've got about 328 names losing ground on this Wednesday, 174, Katie, to the upside, one unchanged.
Let's take a look at the sector performance as well. Different picture from yesterday. You definitely had more losers than gainers. 3 sectors in the green. Leading them was consumer staples, a pretty defensive read there to see that sector in particular rallying the most by 1.7%. Energy also higher as Brent prices do march higher. Real estate also managing to squeak out a gain, but at the bottom of the pack, industrials down 3.4% and 2.5%. A decline in materials.
I just want to point out the Dow Jones Industrial Average down the most, biggest one-day drop, I should say, since October of last year.
All right, guys, let's get to some of the gainers in today's session. Got to start with Cracker Barrel. A record gain intraday, highest in nearly 8 months. 1 point intraday, the stock was up as much as 35%. Here at the close, it's a gain of just shy of 23%. Logo and restaurant design scandal be gone. Instead, whimsical
Country ham.
Can't believe.
I know, salt and pepper shakers, Americana.
Salt and pepper shakers. Best day since 2020.
I know. How many times do you go there?
All the time.
All right.
I love crackers.
There's one in Clinton, New Jersey.
Good to know. Anyway, definitely a different song on Wall Street here for this one, a different tune when it comes to investors. Restaurant chain raised its full-year revenue guidance and said declines in store traffic are moderating. It's now up about 80% year-to-date. 27% of the float is short, though, so just keep that in mind in terms of sentiment. Hey, I got to go to what is the #1 gainer in the S&P 500, and that is Casey's General Stores. Shares rallying after the convenience store chain reported revenue for the fourth quarter that did beat the average analyst estimate. And there was one standout stat. There were a bunch of stats you could go over, but fuel revenue, $2.88 billion, up 18% year over year, easily beating the estimate on the street of $2.66 billion. That certainly helped the company out. Stock is up nearly 60% year to date. Only about 4% of the float is short. And then I just want to go real quickly to an IPO today. Parabilis Medicines. I'm hopefully saying it correct. I don't know if I am. PBLS, biopharmaceutical and clinical stage cancer drug company, raised nearly $745 million. It was an upsized IPO, pricing above its marketed range and a private placement. One existing investor, RA Capital, taking more than half of the shares in that IPO. That's according to people familiar with the matter, but that stock closing up 58%. So pretty successful IPO here.
Okay, not all IPOs good today, and I'll get to one of those a little later. Before we do that, though, I want to get to Super Micro, the worst performer in the S&P 500 by a long shot today. Fell 28%. It was the biggest drop going all the way back to March. That's the stock of Supermicro over the last couple of years, very volatile. The company announced this plan to raise $7 billion through a package of equity offerings to help pay for the production of more AI servers. Investors did not like the sound of that. The financing plan expected to dilute near-term earnings, but also signals that AI demand could lift fiscal 2027 revenue above the $50 billion consensus. Once again, Supermicro shares falling 28%.
Why is the stock in the S&P 500?
Well, it was, and then it wasn't, and then it was again.
Yeah, I know.
Like, I don't know. I mean, you're going to have to ask the group of people who make that decision, right?
Okay.
Maybe while you're at it, you can ask them some questions about SpaceX, too.
I was going to say, I feel like we all care about index methodology more than we ever have, which is a beautiful thing.
We do. We spoke to the CEO of Wealthfront, David Fortunato, a little earlier about how, after maybe 4 or 5 days, SpaceX will be in VTI.
Yeah.
And how, they had a blog post on their website so people can include or exclude it from the portfolio. It's been a very polarizing stock, as you guys know.
We've encountered it.
Yeah, you've encountered this. Let's talk about some less than truckload companies, LTL.
You're speaking Romaine's language.
I knew that
right.
Romaine would love this story. Look at this.
I was on the phone all morning about this.
Old Dominion down 5%, FedEx Freight down 7%, Saya down 3.3%.
Mm-hmm.
What does that say?
It says that Amazon is getting into their territory. Amazon announced an expansion of its own shipping service. It includes less than truckload offerings to destinations across the U.S. It's part of the Amazon Supply Chain Services suite. Analysts have a mixed view on the impact, but there are some concerns about legacy carriers such as these taking a hit as a result of Amazon getting in their territory. I was on the highway yesterday and actually saw an Uber freight truck, which is not something that you see every day. All right, we got Oracle shares, or Oracle headlines crossing. Romaine, take it away.
That's right. Oracle just crossing the wire right now in the fourth quarter. The company says that we'll start with the revenue number. Overall revenue, $19.18 billion. That's slightly above the average of street estimates. They were looking for about 19.09. Software revenue at 6.82. That's a slight miss. The street was looking for 6.88. Operating income as well as operating margin just a smidge above expectations. The bottom line a little bit better, $2.11 a share in the most recent quarter. The street was looking for $1.97, so a beat on that number. I'm trying to suss out the cloud revenue here, but it does look like they beat on most of the metrics. Service revenue up 13%, hardware revenue up about 9% as well. Not seeing any guidance just yet that jumps out, but you see the knee-jerk reaction to the downside with the shares.
Absolutely. Also taking a look at free cash flow here, certainly a metric that has been in focus for Oracle. Free cash flow was negative $23.7 billion for the fiscal year 2026. We know that Oracle has been, trying to shift the business a little bit here, trying to support its cloud infrastructure business. As a result, that has meant that they've been burning free cash flow.
Those cloud infrastructure numbers now crossing the wire. Revenue was $5.79 billion. The street was looking for $5.72 billion. And this gets back to the question about high expectations. A modest beat, but obviously not enough. Yeah,
and the total cloud revenue, $9.9 billion, up 47% in USD. That's a quarter. I'm just looking at the press release here. Quarterly revenues increasing 21%. In terms of commentary, we're really going to have to wait till we get on the call and hear from executives at the company. But you got that cloud infrastructure revenue up $5.8 billion, up 92% in constant currency, and up 93% in dollars. Fourth quarter cloud apps, so that's the SaaS revenue, $4.1 billion. That's up 10%.
But I want to keep harping on this idea of high expectations. You said 90% growth, which by any other measure. But also when you look at this earnings release, at least the narrative that they give out, you see the word record over and over again. Record performance obligations, record earnings, record revenues, record cloud revenues, record EPS, record this. I can go on and on. But that's just not it.
Well,
that's just not enough.
Stock down 8% in the after hours. Yeah.
Down 8% in the after hours. It's up about 5.6% year to date. It's up 50% since the low in early February. So you've got to kind of think about what investor expectations were going into this, and maybe, like you say, record numbers, significant, but maybe just not enough.
But they're down. Carol Massar?
Fortunately, Anurag is joining us in just a minute.
Down now.
Down from their high. Down, what, 10, 11, 12% from that record high, which was all the way back in September?
But
this has been an underperformer.
But what I'm saying is that they've rallied since the low in February. So they've had a bit of a bounce back.
Yeah, okay.
I'm just saying that going into this. So yeah, if you go back even further, yeah, I mean, there's a lot of perspective. But in the recent tone, it's been a little bit higher.
Okay, can we argue about this later?
Yeah, lovely. Right. Yeah, no, I'll be out the door.
I'll be waiting for you.
Yeah, right at 5:01, she'll be over at your desk ready to talk about Oracle. I can tell you that.